Well, the Reserve Bank MPC has afforded a huge relief to consumers who are financially hard-pressed and for the first time in 11 meetings decided to keep interest rates unchanged. But Governor Lesetja has left the door open for more possible hikes, and this could be just the case when the next time the MPC meets in September. But how have these consistent hikes amounting to 475 basis points since December 2021 affected ordinary South African consumers? For that, we speak to financial expert and co-founder at Imvelo Wealth, Siba Njoba. Siba, thank you very much for your time and joining us this afternoon. I want to start here that a lot of consumers are breathing a sigh of relief this afternoon. So are businesses who have a lot of debt to deal with. How have consumers been affected by the interest rates since the hikes began? Because we know that this is the first time in 11 meetings that the pause has been hit by the MPC.
Sure, Xolani, the news we received this afternoon were great and well anticipated. Overall, higher interest rates have meant that South Africans are paying more and we're experiencing higher cost of living. And this is because high interest rates mean that it's more expensive to borrow money, and households have had less in their household disposable incomes, and it's been a very difficult period to make ends meet. Also, with that said, we've been seeing reduced access to credit because people are not affording to take on more credit because they're really squeezed in terms of the impact of all of these interest rate hikes. The other key thing that has really been a great impact is the slower economic growth. I really believe that the monetary policy stance has been really, really aggressive and restrictive. So that has resulted in our economic growth being really revised lower. In fact, I think it's about 1% in growth expectations. And that's really, for an emerging economy, at least it's positive, but it's really conservative. It's on the conservative side of the growth scale.
Siba, have individuals been pulling out from other commitments like insurance, retirement funds, medical aid? Because we've seen a lot of data saying that those consumers who are hard-pressed are choosing to change when it comes to their home loans. They are also choosing to give up and dump expensive schools in order to actually make ends meet. Where are the trends going as far as the choices consumer have in order to keep up with some of the high interest rates for the commitments that they have?
Look, consumers have really been under a bit of pressure, and if one is looking at their finances and you're looking at an area in which to cut down, insurance, retirement fund savings, your top-up contributions, whether it's through a retirement annuity, your medical aid, those are normally places where people look to start to cut down. And again, this is attributed by the factors at hand, which is the high cost of living, as well as the slow economic growth. Alexander Forbes recently published a study where they say that only 1 of 5 adults in the country have medical aid. And this is from the members that participated in this particular study. And also 25% of that pool, right, they had no access to a pension fund or provident fund or any fund or retirement fund contributions. And an overwhelming 46% of those respondents indicated that they were struggling to make ends meet. And this is really painting a dire picture, and it's really hampering also on people's ability to save.
We always focus on the negative when it comes to interest rates, but there are some positives. Are there trends you are seeing around which groups have utilized these high interest rates as a method to try and get good deals, perhaps people buying property in this particular period?
You know what, Xolani, whenever there's the crisis of sorts, there's always opportunities. And for people, for example, who are in the property space, in a situation where we found ourselves in, where many people were struggling to keep up with their repayments and cutting down, you would have seen a lot of property that we would have, gotten at a discount. That is a positive to someone who's wanting to go into the property market, because they would have obtained a property at a discounted rate, whereas in normal market situation, they would have had to maybe pay full price for that. So as much as it's a negative for the one, it's a positive for the other who would be trying to get into the property space. And then from an investment perspective, you will find that higher interest rates really benefit your pensioners and investors in money market funds, because they are ultimately getting more returns due to the higher interest rates, and it benefits them as they invest.
Siba, since we know from today's announcement that inflation is likely going to return to the mid-range only in late 2025, which suggests in a fair assessment that we might only see a cut in interest rates perhaps at the beginning or in the middle of 2025. How then do we as consumers plan from now until that time? Because we know the hard times are going to be with us at least for the next 2 years. But this is one question that answers to this question usually get in one ear and out the other, because people simply do not want to have a budget.
Sure, and it really goes back to that, Xolani, prudent financial planning. We've really had to tighten our belts as consumers in South Africa. It's not just South Africa, actually, globally as well. And I think the key messaging is stick to your budget, review what you're paying for, and see if you cannot really keep within your means. And if possible, try to save with whatever little you do have. And also, I really always encourage people to try and start a business and see where are the opportunities where one can earn an extra income to be able to keep afloat.
The gig economy, indeed, trying to get an extra income has been said one too many times, particularly during these hard financial times. Siba Njoba, thank you very much for your time.